You've seen the future of batteries. We're going to stay with the future, the currencies of the future, which could be many. But today they're going to be carbon and biodiversity. For our next very interesting panel, I'd like to welcome on stage, please, Alexander Domin, partner and co-head of Impact Ventures, Trill Impact. Ronan Carr, lead analytical officer at BeZero Carbon. Dimple Patel, CEO. Please come on up. NatureMetrics. Kristian Rönn, CEO and co-founder at Normative, and the moderator for this fantastic panel, Michelle Capiod, co-founder and partner of Blume Equity. Welcome. A round of applause, please, for the currencies of the future, carbon and biodiversity.
We're doing some math up here to get started. Since we're into currencies. Good afternoon, everyone, and welcome to Currencies of the Future, Carbon and Biodiversity. My name is Michelle. I'm a co-founding partner of Blume Equity, climate tech growth equity firm. We invest in climate tech scale-ups from Series B. We do both software and hardware, something we've been discussing a lot at the conference today. And we typically invest from Series B onwards. And we have, I think, 3 of our portfolio companies here with us today at the conference. So might have had a chance to meet a few of them. As a climate tech investor, I am incredibly excited to moderate this panel discussing the urgent need for climate action, and in particular, the fundamental aspect of having carbon and biodiversity markets at work. We're also going to be discussing structural and regulatory developments in the space and scaling challenges and innovation. So this looks to be a very interesting and lively debate, I hope. We're fortunate to have with us today a really impressive panel of experts spanning from carbon accounting to carbon ratings, biodiversity, and impact investing. So I'd like to start by having each of the panelists introduce themselves and give a little bit of background on their company as well. So with that, maybe we can start with you, Ronan, from BeZero. Over to you.
Sure, thank you. Hi, everyone. I'm Ronan. I'm the lead analytical officer at BeZero Carbon. BeZero is a rating agency for carbon markets. So we provide quality ratings and risk analytics for any carbon asset, and over time, other environmental assets, hopefully too. We've rated over 400 carbon projects globally. And we have 5,000 subscribers to our publicly available ratings. So yeah, looking forward to the conversation.
Alex, over to you.
Yeah, I'll go next. Hello, everybody. My name is Alex Domin. I'm the partner and co-head of ventures at Trill Impact. We're a multi-investment strategy house with private equity, microfinance. I run the venture unit, where we look generally at investing in Series A+ companies across Europe in the green tech and life science space.
And I'm Kristian. I'm the CEO and founder of Normative. We do software for carbon emissions accounting and management. So that means that we help companies account for the full carbon footprint of their own operations, but quite crucially, their value chain as well, so that they can take the right actions and go towards net zero emissions.
Hi everyone, I'm Dimple. I'm the CEO at NatureMetrics. NatureMetrics is a nature data intelligence platform, but rooted in eDNA technology. So we've built up data sets from over 110 countries, and we deliver those through a digital platform that enables companies, organizations, and NGOs to actually measure their nature impact over time using time series data, and now bringing in things like satellite modeling as well. But doing a lot of early work on the biodiversity credit side, so very, very much looking forward to the conversation.
Brilliant, thank you. So we all know that we're not exactly on track to meet the net zero goals and the Paris Agreement. And I'm sure you've heard a lot around energy markets today, but I think it's really important to appreciate that we need to take a holistic approach and looking at every single tool in our toolbox to address the climate emergency. So I'd like to start off this discussion with the urgency and understanding a little bit more how you, perhaps, Ronan, think about why carbon markets are so fundamental to achieving net zero?
Sure. I mean, I think it's fair to say that the first priority is reducing absolute emissions, but carbon markets do have a role to play as part of a kind of a coherent, integrated strategy to achieve net zero. Not least because by 2050 there will be maybe 10 gigatons of non-abatable emissions, and if we're going to create the markets and infrastructure to remove those 10 gigatons, we need to start today. We can't wait until 2050. I think it's interesting, overnight the Science Based Target Initiative have kind of changed their stance slightly and are now advocating that there is a role for carbon credits within an integrated strategy where emissions reductions is first. So we continue to respect the mitigation hierarchy, absolutely. But in that context, I think the name of the panel is the Currencies of the Future, and when you purchase carbon credits to offset your emissions, you're putting a price on your emissions. I think that's a really important signal. And I think that's one of the big reasons to do it. You're embedding that cost into your P&L. And on top of that, you can then channel finance to the global south. You can channel finance to the preservation and conservation of nature. And you can channel finance to new and innovative technologies that can help us to achieve net zero. So for all of those reasons, I think it's got a role to play. It's not the most important thing maybe, but I think it's got a key role to play nevertheless over the next 20, 30 years.
Very interesting. Kristian, I'm curious, you obviously sit at a slightly different angle in terms of helping corporates decarbonize by helping them understand what their true emissions are. What's your perspective here?
I mean, obviously, in order to manage your emissions, you first need to measure them. I mean, that is more or less a no-brainer. And we're sort of coming from it from the angle of value chain decarbonization. We did this study actually at last COP, where we're a part of the Swedish delegation, where we looked at 1,000 companies that already have net zero commitments. Turns out that if they succeed, and more critically, the value chains of those businesses succeed in their net zero transition, we would reduce like 80% of global emissions. And it sounds a little bit too good to be true, because it is in a way. Like every single company on the planet are failing with their net zero targets right now. And that's because they don't have that level of supply chain transparency.
Yeah.
So I mean, you do not only need to account for carbon emissions, but you need to have a global exchange of carbon data as well, where I as a buyer see all the way down, like what technologies do I need to invest in? Is it solar? Is it electrification of vehicle fleets? Whatever it is, but you can't take those crucial decisions unless you have the underlying data. So I mean, that's what we're trying to provide at Normative with our carbon accounting solution and carbon network.
I see you nodding, Alex. What's your perspective as an investor in terms of, do we have commercially scalable solutions today?
Yeah, absolutely. I mean, in the end, we are an impact investor, but we're still driven by returns, right? And so we look at the areas that we think are going to grow tremendously. And I'm absolutely with you that we can't wait until 2050. This is going to start happening much, much sooner. And it really needs to, because I've been investing in this space for 15 years, and every year you see, this carbon dioxide increasing, and we're like, oh, but now we're going to draw down, and next year we're going to draw down, and this curve just keeps increasing. And so, in the end, for us as investors, it was important to then come also to the realization it's what Normative is doing is incredibly important, but also actually drawing out carbon from the atmosphere, and this is kind of the place that we're putting our bets in, but at the same time, there's so much to be done, and luckily also quite a bit of capital flowing in, finally.
Dimple, you're focused on biodiversity. There's so much talk about carbon all the time. Biodiversity, is it a forgotten word in the vocabulary of investors? Are we doing enough in biodiversity? Because essentially, if we want to take a holistic approach to climate action, biodiversity is crucial, right?
Yeah, of course. So we're definitely seeing more conversation around biodiversity following some of the regulation, like TNFD last year. You can't meet your net zero targets without considering biodiversity. Yeah. But if you look at the stats on biodiversity, they're actually quite alarming. I mean, we've had, wildlife populations have declined by up to 69% over the last 50 years. And this is decline that is irreversible in some areas. And when you look at the financing gap, that's $700 billion that we need to be able to recover biodiversity to meet the goals for 2050. So this is an incredibly urgent issue, but again, it hits into a lot of the issues that Kristian was talking about. How do you measure 1 unit of biodiversity? How do you value it? So the first step for organizations has got to be measuring their nature impact, accounting for it, and then taking action against it. And biodiversity credits are a small tool within that. They were called out by the GBF, but even at full scale, there will only be 130 billion of that 700 billion gap.
That's quite astounding.
Jump in there like really quickly? I think what you're doing is truly amazing, right? And the reason why I got into carbon in the first place, it's not because I value carbon in and of itself. Like, I don't care about carbon emissions and global warming on Venus. Like, I care about the impacts of carbon emissions and the impacts on biodiversity, right? But also the impact on human health, with millions of people like dying prematurely because of all of the famines and climate refugees and global conflicts that are caused by climate change. So I think it's all connected in the end of the day. And I think really good that biodiversity is starting to be measured scientifically in the way that carbon emission is doing as well.
Glad to hear there is agreement on the panel. The urgency is real, and we need to do something about it. Let's talk a little bit about the market structure. I mean, it's quite a complex space to understand. We have credits being categorized into avoidance, reduction, removal. We can look at it through nature-based versus engineered credits versus hybrid. You can also think about the market in terms of the voluntary carbon market versus the compliance market. You can think about insetting versus offsetting. Ronan, can you explain a little bit, how you think about the market structure and how you think it's going to evolve over time, and whether you think ultimately we will see real convergence between what is a compliance versus a voluntary market?
Yeah, I think these delineations are starting to break down. I think that's likely to continue. The traditional name of the voluntary carbon market is becoming increasingly a misnomer. Yes, we still have companies that voluntarily choose to purchase carbon credits to offset their emissions, and that market, although it's gone through a bit of a wobble in 2023, it actually is at record highs in terms of retirements in recent months. But many of the companies that are doing that are doing it because they've made public commitments to their investors or to their other stakeholders, and so it's only really voluntary in certain senses.
Yeah.
In the meantime, a lot of governments are starting to integrate carbon markets into their regulated schemes. So you've got, I think, 22 jurisdictions globally now where carbon credits can be used to meet liabilities that either from carbon taxes or from cap and trade or emissions trading type schemes. Countries like South Africa and Colombia, but also Singapore, which is introducing a carbon tax where carbon credits will be eligible in part to meet that liability. And often they're domestic, but in the case of Singapore, you're allowed to use global carbon credits. And much bigger economies like Japan are going to go down this road. And we're also seeing the implementation of the Paris Agreement and the start of sovereign governments entering into carbon markets to meet their NDC, their global, their carbon targets. So you've got large buyer countries like Switzerland that are already entering this space, and I think globally we've 81 bilateral agreements now between countries, 9 buyer countries and about 20 or I think about 40 host countries. And so really at all scales, companies to the largest sovereign governments are entering the space, and these delineations I think will become less obvious over time.
Very interesting. And then from a pricing perspective, do you think that we will see convergence as well?
That's obviously the upside case, right? So if the carbon in the EU ETS is trading at whatever 80 euros, then that's a long way up from where we are today. But even in Singapore, I think their carbon tax is starting at, if I remember this correctly, $5, but rising rapidly to $35. And that already would be quite significant for the carbon markets, which prices range quite a lot. It's a very heterogeneous market, but the average price is certainly lower than that. So, if you run the numbers, the potential demand from regulated markets dwarfs the supply today. The largest regulated scheme is Corsia, And that's the scheme for global airlines. And the demand from CORSIA will be between 60 and 160 million credits between now and 2027. But that rises to hundreds of millions of credits by the time we get to 2030.
Yeah.
And if we had maybe 200 million credits retired last year, like these numbers, we could quickly swamp supply with demand if that regulated demand came in very quickly.
I mean, I think if you look at some of the projections in terms of the VCM market, it's what, 2 billion growing to 100 billion market over the next several years. So from an investor perspective, it should be really, really attractive. Yet, Alex, you are focused on insetting. Can you tell us more why you're so excited about insetting?
Yeah, absolutely. So a company that we are about to invest in, I would love to talk about it more, but the ink isn't dry yet. So we've been looking at the carbon markets and been trying to understand, what the drive is behind these companies and really wanting to do something and buying these voluntary credits. And that's when we stumbled then on insetting versus offsetting. So offsetting is really where a company can buy a carbon credit that's not related to their supply chain, versus insetting means that you really try to reduce your own scope 3 emissions through your own supply chain. And this is something that you can do with nature-based solutions if, for example, you are a food company. So the Nestlés of this world have pledged billions of dollars to make sure that they would start sourcing as much as possible from these kinds of projects that are in their supply chain, so it's really reducing their scope 3 emissions. But again, to Dimple's point from before, it's also about so much more than just carbon, right? So if you have a company that's really helping the food supply chain move towards regenerative agriculture, it stores carbon, but it also increases biodiversity. It increases the resilience to climate change by increasing the water retention. You need less fertilizers, less pesticides. And so it has all of these additional benefits around that as well. And that's why we fell in love with this kind of space. And I think my favorite due diligence call was with one of the largest bakery chains in Europe. And they said that for them, supply chain security is the #1 topic. But another problem is that because we've been destroying the soil so much, the actual quality of the food has gone down, and the protein content in the wheat and the grains that they're getting has gone down to the point where their croissants are not raising properly anymore. And I mean, saving the planet is important, but saving the croissants, we figured, would be also really, really important.
Brilliant. Dimple, do you see parallels as you are investing your efforts into the more, I would say, early or more nascent biodiversity markets? Are there parallels or learnings in terms of how you see the market developing with NatureMetrics?
Yeah, definitely. So I think the carbon markets have been on a real journey, and there's some learnings that we can take from there in terms of where some of their challenges have been, specifically in relation to integrity, measurement. And to some degree, yes, it's disappointing that biodiversity credit markets are still quite underdeveloped, but it's also an opportunity to be able to put in those structural layers early on. How do you bring in robust MRV solutions, which means that you're taking credible, high-integrity financial instruments to market? And particularly when you look at the nature of biodiversity versus carbon, there's a huge amount of additional complexity that you need to address. So if those fundamental governance structures are not in place, you don't have a chance of actually cutting through the complexity and presenting it in a way that demand is able to understand, and it inspires confidence. So I think right now, taking learnings in terms of governance, regulation as well, we're starting to see some early regulation come through in the biodiversity space. But if you look at the Paris Agreement, that actually details the mechanisms behind carbon markets to a level that you do not find in the GBF. It references biodiversity credits playing a role, but actually leaves the governance structures completely open to interpretation. So I think, yes, a huge opportunity to build right. I think given the finite nature of biodiversity, we don't have a lot of time to get it wrong. And then we start thinking about the methodologies to tackle some of the ecological complexity.
Do you think there is a sense in combining the two, where the co-benefits from biodiversity should be incorporated? In reality, we couldn't really separate the two because you can do good in one area and bad in another. Don't they go together?
Yeah, I mean, already today, many buyers are quite focused on co-benefits when they're purchasing carbon credits. So I think it is already something that people care about. Sometimes the nature benefits may not be completely in sync with the carbon benefits, and so I think we do need to take a holistic view. I think you'd rather have a natural reforestation project that's very biodiverse than a pure monoculture plantation which has no biodiversity. And arguably, in the very long run, the former is much more sustainable in terms of its own health anyway. So you can make the case from an asset perspective. We may see the markets grow up and independent biodiversity markets, nature markets emerge too. I mean, they're still very, very nascent, but I think bundling them to me makes a lot of sense.
Kristian, what do you think, measuring carbon? Will you also start measuring biodiversity?
I think it makes a ton of sense for various reasons, right? As I said before, if we think about what are the things that we intrinsically value here, I don't intrinsically value a ton of carbon. I value the consequences of carbon, right? So, I mean, that has been known within the scientific field of life cycle assessments, or more specifically, life cycle impact assessments for a long time. So what you typically do when you take the life cycle assessment of a product is that you say, oh, you have a bunch of carbon emissions, but what we actually care is the biodiversity implications of that carbon. So then there's sort of conversion factors between carbon and biodiversity. Same thing, conversion factors between carbon and human health, for instance. So I mean, all of these models exist, but they're used by geeks within academia and within the field of life cycle assessments, and people in the carbon market space and sort of people with the financial hats on are not aware of these models. So I think there's huge opportunities if you just sort of geek down a little bit to consolidate the approach.
I guess that takes us into the next area I'd love to discuss with you, and that is around the credibility hit that I think carbon markets have taken last year, where the integrity piece has been under scrutiny, let's say. Kristian, if we start with how you think about it as a carbon accounting provider, how do you deal with imperfections in the market, and specifically looking at scope 3 emissions that are 90% plus of emissions, and the importance of value chains to cascade down to net zero? What's your perspective there in terms of building integrity and transparency?
I mean, I think I'm a big fan of markets, but I'm also hugely skeptical of markets, because whenever there is an opportunity to game something, and if you can make a bunch of money from gaming something by being extremely liberal in your assumptions, there will be players that start to game those markets. I mean, that's what we saw from the first markets of the tulip market crash in Holland. We didn't know how to account for value properly. So people invested in tulips and thought they could make a shit ton of money from that. And it turns out that our way of accounting was more or less fraudulent. So obviously that crashed, right? So I think in terms of carbon accounting, I mean, we really need a rigorous procedure of accounting for carbon emissions, both on sort of, I guess, the debit side to set a clear baseline. And to do that, you need data from the value chain. You can't just have sort of a spend-based estimate and say, oh, we roughly spend this much in this category, so we guess that our carbon emissions is X, Y, and Z. You need the real data where there's an audit trail from your supply chain. But equally, when we talk about these projects, I mean, both regardless if it's insetting or offsetting, we need to have a combined principles of what do we compare against. Because us as a carbon emissions provider, at least in theory, if I estimate carbon emissions in a particular supply chain, I could account for all of the fuel and in theory at least measure the carbon emissions with sensors that have been released to the atmosphere. That could be done in theory, but when you talk about insetting or offsetting, you sort of compare to an alternative that did not happen. So I mean, for instance, if you do offsetting with planting trees, You could say, oh, I would have cut down like the entire all of the trees on the island of Borneo, for instance. But is that really sort of a realistic assumption? So that's where a lot of the markets have been in trouble, because you make sort of unrealistic comparisons. So that's why, you know, something like the Oxford Principles are so freaking good, because finally we're sort of, you know, starting to get a little bit more agreement on how to do this. But I think it's far from done, and I am a bit sort of skeptical. I think some people will get screwed over, and there will be actors trying to game the system. Sorry for being a little bit of a buzzkill in a way.
Ronan, I'm very curious how you think about this. We've obviously seen a flight to safety in the last 12 to 18 months, and the fact that you're providing carbon ratings, does that help bring greater transparency, and do you think it will lead to essentially the junk end of the market being eliminated, or how do you think about the need for the spectrum if we compare it to the bond market, the AAA to the kind of CCC rated bond?
Sure. I mean, look, this is why we started BeZero, right? Ultimately, I mean, building on what Kristian said, our carbon credit always has embedded uncertainty in it, right? You can never be 100% certain that the ton that's being claimed has truly been achieved, and so it's a risk asset. We need to accept that, but we then need the tools and the information architecture to understand that risk asset, and that's what we're seeking to provide with ratings. Our ratings are an opinion on the likelihood that the credit's achieving a ton, and that means AAA means it's very likely, and a highest likelihood in our opinion, and all the way down to single D, which is lowest likelihood. And this helps to change the incentive structure if it works, because it can incentivize a risk-driven pricing in the market, which we haven't had historically. Yeah. It actually was a market that rewarded volume, not quality. And if you have a market that rewards quality, then they get priced higher, and then there's an incentive to create higher quality assets. Higher quality means more effective, more likely to be achieving what they're saying they're achieve. Now, in terms of the legacy supply that people worry about as being low quality, I mean, the whole point is to move away from an overly binary perspective, right? There's a spectrum of quality, and there should always probably be a cutoff. So, you know, I don't know whether it's single D, single C, single B. You know, there are other initiatives like the core carbon principles, which are trying to set thresholds as well. Yeah. But in a world where you kind of assign a certain amount of probability of effectiveness based on a rating or some other tool, then you can start to think about discounting. And we've actually proposed a discounting framework where you would say a AAA rated credit is essentially close to achieving a ton. We believe that, whereas a single C rated credit is only achieving 10% of a ton. And if people accept that kind of a framework, then you can buy 10 of the lower rated, lower quality credit to achieve the same as buying one AAA. Or you can set the threshold higher, as I say. So it's about changing the incentive structure. And just as a final point, interestingly, we are starting to see the market move in this direction. So since we started, you know, the BeZero ratings platform 2 years ago, we've gone from no correlation between prices of the traded price of carbon credits against their rating to now a noted correlation. And we see every notch in the rating scale is worth 25 to 30% higher in terms of prices, and particularly for credits rated, you know, above BBB, they're 100 to 200% higher than credits rated lower than that. So the market is starting to become more efficient, and that is the hallmark of a proper market, that quality is priced higher than low quality.
Can I ask a quick question there? I know that you're the moderator, so sorry about that, but is there a correlation between different actors as well on the market, like different sort of rating actors? Similar to what you would see in sort of, you know, credit risk ratings, for instance, they're 96% correlated. Are you starting to see that correlation between what you're doing and what others are doing as well?
Yeah, if we look at the rating agencies and carbon markets, there's probably rough agreement on maybe 2/3 of projects, but that means there's another portion where we're not always agreed. People find that problematic. I would say it's a very young market, right? Credit rating agencies have been around for over 100 years, so they've had a bit of time to get it right in that sense. Also, rating agencies in the carbon market don't all necessarily have exactly the same definition for what is defined as quality. It's not always 100% clear as well what goes into the models. I mean, our ratings are available for free, so anybody can run the numbers against us. It's more difficult for us to do that with our competitors. But I think over time, we probably may see more convergence as the market dictates, how much of a weight we should attach to additionality, how much of a weight we should attach to non-permanence risk, or maybe to biodiversity or other co-benefits. And I think that will probably help to get that convergence. But the question is maybe posing, is there too much divergence? I would say that problem is overstated, because more of the time we agree than we don't agree.
Yeah, and you mentioned 100 years, and we don't have 100 years
Absolutely.
for it to be perfectly correlated. So it is a little bit difficult.
But we're 2 years in, so I think we've made a lot of progress.
We
in 2
need
years.
to start, moving as a community, right? But yeah.
And speaking of complexity in nature-based solutions and biodiversity, as you mentioned at the outset, Dimple, it's even more complex. So how can we ensure comparability of projects and integrity of projects?
Yeah, so something that
perspective?
Kristian said actually that I think is incredibly relevant to biodiversity at the moment, which is baseline.
Yeah.
So when you look across the market, this is where a lot of companies are. They're establishing their baseline. Equivalent with projects, you need a starting point. But actually what we're seeing is the way those baselines are established are actually quite poor, and they're quite patchy. And there is high integrity technology out there. I mean, NatureMetrics obviously has a super robust solution for this. But when you establish a strong baseline, you're able to then better track change over time.
Yeah.
And so this is relevant not just for nature positive strategies within companies and organizations that are now starting to track it for the first time, but also by providing that starting point for anything on the biodiversity credit side of things as well. So I'd say that has got to be high priority across the nature space as a whole. I think the other piece is really starting to look, as you mentioned, at equivalence. So, if you're having a nature impact in one ecosystem, you shouldn't really be offsetting that in a completely different ecosystem. That is still a loss globally for biodiversity. And I think these are really important standards that have to be put in place before we even reach trading, before we reach pricing. It's like, how do you actually take action, reducing your nature impact, and how do you, in a really high integrity way, demonstrate that you have done that, because that's going to be essential for transparency. But secondly, if you're not able, whatever you're not able to reduce, what does an offset actually mean? And how far, even geographically, can you go to do that? Because otherwise you could end up with pockets of the world where, it's a concrete jungle, and actually all of the restoration is happening in incredibly concentrated ecosystems, which then completely destabilize the supply chain.
Very interesting perspective. I see people nodding here. And I think that takes us nicely into regulation and the need for regulation. We need carrots, we need sticks. And I think if we start on some of the regulatory initiatives that you've been benefiting from, Kristian, with Normative, there have been delays, there have been watered down versions. We think CSRD, CS-triple-D. How important is the regulation in forcing action and driving adoption?
I think it's super important, right? I've been in carbon accounting for 11 years. There was still a market before regulation existed. That was entirely voluntary. It was mostly stakeholder driven. Let's say you're a big brand with a bunch of stakeholders, and you sort of see the business benefit of disclosing your carbon emissions and reducing your carbon emissions. But that sort of group of early adopters are really small compared to who needs to be on board. Everyone needs to be on board in terms of decarbonizing their value chains. So obviously, it made a huge difference in terms of our growth and outreach with the CSRD. But that's just the first step, right? You're measuring carbon emissions, but there's no legal requirement for you to reduce emissions. But with the corporate sustainability due diligence directive that you mentioned, for instance. I mean, you will need to have that plan in place and that business strategy, and you need to be diligent and have a due diligence process with your suppliers, et cetera, et cetera. So, I mean, that roadmap plays a hugely important role in creating this market. And I think more broadly, I mean, we need to have a carbon tax as well, right? I mean, there's a lot of bets that are somewhat risky in a sense, right? I mean, because a lot of bets in climate tech now are that we will eventually reach cost parity, but there might be situations where you never reach cost parity with fossil fuels, right? And then, I mean, I would love to see sort of almost more lobbying for carbon taxes to have an equal playing field, where the ones that really invest in decarbonization are getting that extra nudge for it to be paying off.
We also start to see more regulation in the voluntary market. Is that a good or a bad thing, Ronan?
I mean, we talked earlier about the convergence between voluntary and compliance. I think governments will have a significant role in shaping carbon markets in the next few years. I think interest from regulators in the carbon markets is a sign of maturity. I think it's something to be welcomed, because it will help to kind of recognize the value of carbon markets and increase their legitimacy. So I think it is a good thing. I mean, from our perspective as a rating agency, we take a lot of inspiration, obviously, from the credit rating agencies, and they are heavily regulated. So we've always built our business around the principles of, governance and internal structures that, assume we will be regulated sooner rather than later. So, divisions between the commercial and the analytical side of the business, governance and processes around assigning ratings, etc., that are akin to what we see in the debt market. So for us, regulation is coming. We see the likes of the CFTC and the US are looking at the space, and these are major influential regulators. So I think it's coming, and I think it's broadly a good thing, as long as it doesn't overly stifle regulation, as long as it's proportionate.
You agree, Alex?
I would add to that, it's so important for investors, right, to have a framework that that this market is coming and that there are chances to be had. And it's a bit akin to what happened to solar, right? If we hadn't had the solar feed-in tariffs, we wouldn't have really, really cheap solar panels these days. And so I think it's really important to really drive that, and also to give people, again, more confidence in this, because what you were mentioning before, I mean, last year was a disaster. There was a very infamous Guardian article, but there's also some of these large voluntary carbon marketplaces like South Pole that have really suffered from public scrutiny. But for us, in the end, we think that's a good thing, because they needed to weed those things out that really didn't do anything for the environment. And so it's a bit like greenwashing these days. I think as a corporate, you're going to think a little bit twice about doing too much greenwashing, because eventually you're going to be caught, and then that's going to have repercussions. That same thing should start happening also on this carbon side. And I think we're making some progress. Europe has just passed some legislation that's at least setting the very broad framework, so we still have a lot of work to do, but it's all moving in the right direction, both for investors, but also for the public at large to have more confidence in these markets.
From a biodiversity perspective, Dimple, how do you think about regulation?
Yes, we've obviously had a huge shift in the way that regulation is coming into play with biodiversity, so CSRD, TNFD, and that's been really effective in terms of changing companies' mindsets around biodiversity. It was so far down the agenda until the forcing mechanism came into play, and people started to look at their nature impact for the first time. So I think regulation is going to be incredibly important, in driving action with organizations in terms of actually taking accountability for the nature impact of their operations, but also on the supply side. If we're looking at biodiversity credits, how do you ensure the integrity of the credits that are going to market, the governance structures that we're going to need, but also behind all of that, things like land use. When you look at the projects that are in play, how that impacts local communities, indigenous people, etc., there is a huge amount of complexity when you think about the different layers of regulation that need to align to make this an effective market mechanism. But I think, actually, if we hadn't seen that shift in regulation over the last, I'd say, 2-3 years, I don't think that we would have made the progress that we have even seen so far on the biodiversity side. So I think it's going to be really important.
Super. Let's talk about something slightly more uplifting than regulation, shall we? Let's talk about scaling and innovation. Maybe we start with some of the scaling challenges. What have you seen as the major bottlenecks for you, Dimple, when it comes to biodiversity and nature-based solutions?
Yeah, so I mean, when we're thinking about the financial innovation on the biodiversity fund, so there's a huge amount of activity happening in blue bonds, green bonds. They're building on well-known financial instruments, there's an infrastructure already in place. When we're looking at biodiversity credits, it's still very much in the methodology phase. So how do you aggregate from the ground up to a single metric that you can track over time without losing some of the detail and the complexity and the integral balance of an ecosystem? So I say those are some of the challenges that we're working on actively at the moment. But I think once you set those standards, you're able to borrow a lot of the market mechanisms from the carbon space, but keep working alongside regulation, nature positive strategies. I say nature positive, that is not even defined. So companies say they're moving towards a nature positive strategy. Nobody has actually quantified that. So every layer that you peel back, there's a new definition challenge. There's a new conversation that needs to be had around how we quantify something. But these are all conversations that are happening, and there's a huge amount of infrastructure that we can then borrow, build on. But I think, as Ronan mentioned, some of the early steps that we've seen scaling is adding on biodiversity as a consideration for carbon credit. And I know you get into challenges around additionality, etc., but it's really also shifting that mindset that actually just because you have bought a carbon credit does not actually mean that you are doing the right thing from a biodiversity perspective. And there are additional uplifts that you can get from concentrated investment. So I'd say that is getting us started, but a huge amount of definition that we still have to do.
Alex, from an investor perspective, what do you think are the major bottlenecks here?
I think it's this continued worry about the data, right? So these kind of ratings of like making sure that we know what we're investing in. And so I think this is why it's such an exciting time in this place, because we're also invested in a satellite company that supports and provides the data that we need. And AI is now coming out and really making sense of a lot of the data. So hopefully the confidence in all these models that we have will keep increasing quite dramatically, because so far, especially around nature-based solutions, there's just a lot of uncertainty. And I think that's also holding back a lot of investment in this kind of a space. So hopefully this convergence of more data and being able to interpret the data is really going to drive this thing forward.
So data and frameworks together make for an easier investment case.
A good cocktail, hopefully.
Yeah,
yes.
a good cocktail. Let me ask each one of you, what are you most excited about from an innovation perspective? Starting with you, Ronan.
I think it's, there's a finite amount of potential carbon assets in the world, whether they're used to inset or offset or at a sovereign level. And they all need this data and integrity tools. And so that creates us huge opportunities for innovation and investment in the MRV and the sampling, not just in geospatial, but think about soil probes or eDNA, but also in the market tools, ratings obviously, but other risk management solutions like insurance or portfolio products to invest in and create and build portfolios of projects. And so I'm very excited about the market opportunity, but all of the derivative opportunities that come from that.
Alex?
Yeah, I think, again, this confluence of a lot of areas coming together. So in these carbon markets now, banks are really coming into this, insurance companies, and governments that need to know more about the farmers and the kind of subsidies that they're giving. There's a lot of really interesting business models that are emerging, like a carbon pool doing like carbon insurance. This is something that would have been unthinkable just a few years ago. And so to me as an investor, it's really exciting to see great entrepreneurs coming out and thinking slightly differently, and hopefully finding solutions that really drive this forward.
Kristian?
I'm really excited about standardized way of exchanging data. So something like the digital product passport in the European Union, like you can essentially take any product and see step by step throughout the value chain in a standardized way where are emissions occurring. Is it because of burning of fossil fuels for electricity? Is it vehicle fleets? Is it in agriculture? And then once you have that data and that truly global exchange of data, then you can build all of these market mechanisms on top, insetting or offsetting or biodiversity and truly making meaningful change. So I'm super excited about that.
Dimple.
Okay, I mean, echoing a lot of what the others have already said on the panel, but I think the progress that we're able to drive through high integrity data, particularly in the biodiversity front, having a robust MRV technology in place that is able to take all of that complexity and give you with confidence a single metric that you can use to drive action, that for me is going to be game changing. And then when you pull in market mechanisms, but also some really interesting initiatives that have been happening, so sovereign debt swaps, etc. All of these pieces are going to give us learnings that we're able to then pull together. But it feels like we're reaching that tipping point where people are finally starting to take action. And if we can do that in a data-informed decision-making way, then for me, that's something that's going to drive lasting change.
For me as an investor, I think it's the most exciting time to look at the innovations that you guys are bringing to market. I think there is just, we're at the beginning of a journey, and we have so much technology to support the scaling of these markets. And I think now is really a good time to maybe ask each one of you to make a prediction. As investors, we obviously are always in need of making predictions. So 5 years from now, what is the most interesting prediction you would make, starting with you this time, Dimple, and then we go that way.
Yeah, no,
it's always hard to be last, isn't it?
I mean, in 5 years' time, I would love to have someone like Ronan organization actually providing ratings for biodiversity credit, because it means that the level and the detail of the data that you're able to provide around the projects has just far surpassed anything that is available on the market right now. And for me, mechanisms like ratings and insurance pop up when there's a viable market. And so that would be an indication of having reached a level of maturity within the biodiversity credit space.
I think we're short on time, but if we can have a few more minutes, if I can just give each panelist 30 seconds to give their answer, we'd be very grateful. Great, Kristian.
I think, hopefully we will be in a place where carbon data, biodiversity data will be as correlated as the profit and loss statement that businesses produce every year, or be as correlated a credit risk rating. So you can truly do apples to apples comparisons and have a functioning market.
Yeah. Great, that was going to be my answer too. So I'll go the boring route and say legislation, I think, is really accelerating, and I'm really hoping that that's going to give us the frameworks to invest more safely, and also for entrepreneurs to know where they have to run to make sure that they also get paid in the end.
Yeah, I think for me, everything we've talked about, the innovation, the awareness, the improvement in the data, can all mean these markets become much bigger and more effective, and that will drive the carbon price up. And then the carbon market actually performs its actual function, which is to provide an incentive to decarbonize, because that crowds in cheaper ways to get your emissions down. And that's the whole point of having a carbon market. So that's my hope and prediction.
Brilliant. Thank you so much. Join me in thanking the panelists for an excellent discussion.